All right, you guys are welcome. All right, so as I was saying, well, I was sharing this screen before the time elapsed. Can you guys see my screen?
Yes, it's visible. We can see.
Oh, okay. All right. So let's continue. Let's proceed. Now, let's take this candlestick, for instance. What is on the board? Let me even do it bigger so you can see it well. All right. I remember in one of our Zoom meetings, Noli explained yes and the bulls to us, where we have the bullish movement and the bearish movement. I also try to explain this particular scenario, the candlestick. All right, so this is how the candlesticks appear. We have two colors that we use to represent the candlesticks. We have the green and then what? The red. So when we have a green candlestick, we say what? It is a bullish candle. Then the red one becomes what? A bearish candle. Good. How do you know that is what? A bullish candle or a bearish candle? Now, when you take any candle, it has an open and then a close. Where does it open? Where does it start forming from? And where does it close, or where does it end? And then we also have what? The body of the candle. So as you can see, from here, where my arrow is, no? Good. From here down up to where the low is, that's called what? The body of the candlesticks. Yeah. All right. So let me start from even the close or the open. For a bullish candle, it opens from what? From the bottom and then close above. Are you with me? To identify a bullish candlestick, it means the opening starts from the bottom and then close above the open. So when we have a candlestick that closes above the open, then we'll say that candlestick is what? It's a bullish candlestick. I'm taking that again. When we have a candlestick with its closure time being above the opening, then we say it is what? It's a bullish candle. Let me finish with this and then I'll go to the bearish candle for you to see. Now, every candlestick has a high and then a low. The candle started from a particular place and then closed at a particular, or how the price even moved that particular day. Let's assume this is a daily candlestick. It means from 12 a.m. or just midnight, when the new day just opened, this candlestick move down small. It opens where the line is where this arrow is. It opened over there. Then the BS or the sellers move it down a little bit, but then they could not sustain it. They could not hold it. So the bulls or the buyers came in, then they pushed the market up to this stage where the high is. Then the sellers came in again. I'm trying to explain how it is formed. So pay attention carefully here. And this is going to help you one day. Where the high is, that is where the bulls or we call the buyers bulls. They move this market from the sellers. They took it from the sellers here and then brought it to this particular high. Where put the high, where I just mark high, no, that's where it ended. Then the sellers came in again. Then they pushed the market down up to the close until that particular day ended. Or let's assume this 1 hour. So when the 1 hour just started with the seconds, with the minutes, bulls move the bucket from sellers up to this particular place. It means the sellers were first in control. That's what it means. That's why we have this low here. I'm going to explain this particular thing. All right. So they move it up to the high of that particular day or time. Then sellers came in. So we'll call it high. Why the candlestick left this particular thing? I don't want to mention the name now. Some call it wick, some call it shadow. Me, I call it wick. Okay. I call it wick. They left a wick over here. So just like burning a candle, a normal candle that we know. Okay. So the sellers were just burning it until it closed up to all the fire went off. So it closed over here. So where the particular candle went, where sellers or buyers moved this into, or where price reached that particular day is called the high. Then when you come down, where price started from originally, or as you're coming down, where it ended down below is called the low. And then that particular thing that you left, this tick that I'm showing you here is called what? The wick. The wick of the candlestick. The wick of the candlestick. So with this particular candlestick, we have the upper wick, which is the high, then the lower wick, which is what? The low. So we have the open there, we have the body, we have the close. So what I want you to understand now is, hello?
Yeah, I can hear you.
Sure. My name is Coach Ale. Let me turn the full for here. All right. Can you see my screen too?
Yeah.
All right.
You can now see.
Okay.
Yeah.
So I was explaining how bullish candlesticks formed. And then let's just know the parts, like I mentioned already. So where market reach or where price reach before it dropped down is called a high. And then when we come down to where it dropped up to before it was pushed up, it's called what? The low. Then if it's a bullish candle, then it means the opening begins from the bottom and then close above it. Then the whole green color you're seeing there is called what? The body of it. Now let's take a bearish candlestick, show you how it is what it is formed. Guys, let's use this candlestick.
Yeah, you use those in the chat so that I think that will help.
All right, so I think as I've been explained with the bullish candlestick, you understand. We just get it from here. So let's take this particular candlestick. The one, this one. I'm going to label the parts. That's how I'm trying to draw it. So this place still remain what? The high and then the low. And it's called the wick of the candlestick. Okay. So with this, the open begins here. A bearish candlestick. For a bearish candlestick, we have the open above the close. We have the open above the close. So with this one, this is the open. This is the open. And this is where it closes. It open here and then close down. This is the high, this is the low, and then this is the body. The whole red color that you are seeing there, that's the body, the real body of the candle. They all have their role that they play. Good. So that's the body. Now, let me explain the psychology behind it. What it means that with the wick, the candle open over here, and then the bulls or the buyers push it price up. They push price up to form a high. Then the sellers came in again. They took it from the sellers. Sorry, the sellers came in. They took it from the what? The buyers. Then they moved price to the open, the original open, and even drag it downwards. But so when they reach the low of it, that some buyers also jump in again and then push market a little bit before the time elapses. So it closed over here, leaving this big body. Now, how do you use this in trading? Let me just say it for everybody to get it at once. It is always good to wait for a candlestick to close before you jump into a trade. So you know how it is going to act, or which people are really in charge. Is it the buyers, is it the sellers? Now I've seen that the buyers took over from what? The sellers. And that had effect on this, the preceding candlestick, so that it buy up to some play before the sellers came in again. I don't know if you guys are getting that particular place. It means buyers were the last people to what? To leave the price. The buyers won this, but they were not enough. The buyers were not enough in the market. They could have pushed this price or this candlestick upwards to even to this particular place. That is why we have so many types of what? Candlestick formations. And that brings us to what? The type of candlestick that we may have in the market. So I'm going to just mention some few ones. We look at them on the chart, then we move on. Are you with me? If you are following, just type 111. Let me see. All right. If you have any question, yes, you can ask or use the chat box. You can mute your chat or your mic, then you ask the question before you proceed. the psychology behind candlestick formation lays a lot of things in what it has effect on how you trade, but people don't take it serious. I never took it serious until I discovered that. First, I was thinking, why candlestick? When you see it selling long, just enter and start making money. But until I came to realize that no, you have to wait, even if it is daily. Wait for it. Then the next day before you execute your trade, it is 4 hours. You have to wait for it. Can you bring up your question, please? If you have any question, ask them. We'll continue. Okay, thank you. I slower the sound. All right, let's continue. If there's no question, let's continue. Let's now look at what types of what candlestick formation. We have a lot of names that they've given to what to candlesticks. A lot of names, but all those things does not really matter. What matters most is you identifying that particular candlestick visually. Let it be in your memory that anytime I see this particular candlestick, this is what it means. Trying to memorize so many names will get you confused. We are not going to write any exams for someone to mark. Don't know whether you guys can hear me. My network is not stable at all.
We can hear you.
Yes, we can hear you now.
Okay, all right, good.
We can hear you.
Good. Like I was saying, there are so many names given to what? To the candlesticks. But you just ignore the names, identify them with your eyes. Know that anytime I see this at this particular place, it means I should either sell or I should buy, or this is what it means. With that, you wouldn't have much problem like I used to have when I was a beginner, when I was struggling with trading. I knew the names very well, but I cannot use them. So we are going to talk about what? The doji, the harami, I think, and which other ones? Just few ones, the most important ones. I don't want to trouble you guys. Okay. So let's move to what? But before I go there, let's understand this very well. That we have two types of our candlestick, the bullish and what? Then the bearish candlesticks. When the market, when it is going up or when it is, we normally, some use white and black, some use, you can choose any color for your candlestick, depending on how you understand it. But the default one is what? Green and what? And red. Green and red. So when green forms, we know that is what? It's a bullish candlestick. When red forms, it means what? It's a bearish candlestick, and then the bears have taken over, or the bullish, the bulls have taken over. So we're gonna look at what are the doji. How are the dojis formed? How are they formed? Let's just take and look at them very well. I'm going to be explaining whilst I just give you what the picture at once. You keep the picture in your mind. That's what is most important to me, the picture. Now, a doji candle, we have so many types of what? Doji. We have so many types of what? Doji candle. Let me try to represent that one with my drawing so that you understand better. Yeah, we identified that this is a candlestick. This is a bearish candlestick because it's red. So let's assume that. Now, what happened? Sellers, maybe let me say sellers were in control. So they moved the market from the top. Maybe the market opened from here. Let me get my reason. I want to explain it for you to understand, so that when you see it, you know that this is what it does. Then the psychology behind it. All right, this is a candlestick. Before even does this, it opened from this place. So it is moving. The sellers were pushing the market, the price. The sellers were pushing it. Then as they were pushing it, this one, the wick is also becoming longer. But it opened somewhere here. Let me use some. It opens somewhere here. Buyers have already taken place, so the market opened from somewhere here. So sellers were just moving it. Then got to a point, buyers also came in. Then they move it, and then it goes to the opening place before the time elapses, or before it elapses. So buyers and sellers, no one was in control. No one was able to take or to win the battle. It opened here and then it closed at the same place. That means it represents what? Indecision. No one won that particular day. Start getting the psychology behind Doji before we get to the type of Doji that we have. Doji mostly represent indecision. Indecision in the market. No one won. So this is how Doji is formed. And there are a lot of what Dojis. You have the dragonfly. I'm going to show it to you right now. We're going to identify this on the chart, but this is the psychology behind it. This is a Doji candlestick. This is how it is formed. Sellers, buyers were in control first. Sellers took over. They pushed the market down. Buyers came again. Then they pushed the market all to where it was what? It was open. So they close the closing place and then the opening place. They all align the same place. You see them at the same place. So we have the high here. The high is here. The low is here. Then what again? It left nobody. There is nobody at all. You hardly see the body of it. It means no one won that particular market. So market can either go up or it can just go down. But anytime we see this at a support, at advantage places like support or resistance, we know that something is going to happen over there. So you only wait for the next candlestick. That's why when you come to that, there's a candlestick pattern, you're going to understand it better. So we don't just use this one alone. When this one forms, you have to wait for the next candlestick before you start to take a decision. All right, so this is called Doji. This is called Doji. Like I said, the names are not much important, but just get the information. Let's see if you can identify this on what? On a red chart. Okay, something like this. So this is a Doji, but this is a type of Doji which we are going to talk about. So when you guys see them, this is called Doji. Can you guys see it? Hello?
Yeah, following.
Yes, we can see it.
Okay. So you see what happened over there? When it formed, so this one, but this particular, I think sellers even once more. There were some few sellers that tried to want the listen. That's why make it move down. Can you see what happened? As it appears here, the next candlestick confirms that it's going to sell, and it really sold. Let's come to this place too. Can you identify Doji here? There's a Doji here too. So this is what I call what? Doji. But it should be identified at a vantage point, a resistance or a support before you take your decision. Don't just enter into it. You can see what's happening here. All the way. Sellers were in control. First, it was by it open here. Then it bought, some buyers took over up to this place. Then sellers came in. Then they move market all the way down to the low, Then the buyers say, no, we will not agree. The buyers came in again, they push price to the opening place of it. Okay, so it becomes what? Indecision. No one won. So market could just go down or to go up. You can't tell. Okay, you can't tell. So let's see if we can identify more of it. It is very common. Dojis are very common. Another one is here. We have 1, 2 here. There's 1, 2 here. Okay. So this is how I call what? Doji. Now, let me show you this. This is a type of doji. I'm going to show you all at once. My drawing may not be accurate. Just bear with me. Okay, something like this. All right. They all have names. Let me give the names to you. So these are all type of doji. This gravestone and this what? Dragonfly. Okay. Those who know dragonfly very well. How it looks like. This one, there's nobody. There's nobody. Nobody. You don't see anybody. So something like this. So that the closure and then the opening happens at the same place. Even though this, it means buyers were, when price opened, it went up, but sellers brought it down to the place where it opened. Then here to the same thing, sellers were in control. Then buyers push market up to where it was also open. So this is where you see this on a resistance, it's likely that market price is going to go down because the sellers that push market from up there up to this particular place. So they could take over and push the market down, down, down. Likewise, this one too. When you see this at a support, it's likely that market is going to go up. I'm sure advanced traders who are here will understand this perfectly, but the beginners to also get it. Beginners just get a name, identify it very well. As we progress, we're going to understand it clearly. So we have this gravestone, the dragon, they're all what? Doji. These are types of what? Doji. Like what we have first. So this is called the indecision. This is called what? The indecision. This particular represents indecision. All right. I think that's all I can explain. I can talk about doji. There are a lot, but they are all not important. These ones are the most important one that we need to know. Okay. Need to know. So from here, we're going to what? Please, we still have some 1 minute for it to go. We are closing 8 o'clock. We have 30 minutes more. So when this one closes, you just join for the last one, then we end the lesson. Are you guys following what I'm teaching?
Yes. Yes. Yes.
Try to ask questions so that it will be nice. This particular candlestick play a lot in, it will play a lot in your trading career. So take notice of them very well. You can have some notes, just draw them, name them. So I call this indecision. Though it is Doji, but I call it indecision. You cannot decide where market will go.
Please, I wanted to ask.
Hello. Hello. I can't hear. I can't hear you. No, please come again. I can't hear you. Brain. Can you see my screen?
Yes.
Okay, someone was asking a question. All right. Hello. Let's move to the hammer or Pinbar. Some call it Pinbar, some call it hammer. Can you guys hear me?
Yes, we can hear you.
All right.
Loud and clear.
Good. So we're now at the hammer or the Pinbar. The reason why we teach this, just maybe one day as you are trading, some mentioning some name that you don't understand. So there's a hammer formation here, Charlie. It could buy or it could sell. Just the way hammer is. Then they use the name based on how it is formed. Similar to a dragonfly bar, this one has a body. Let's see more. This is called hammer or Pinbar. The body could be more than this. It should be like this. So it's called hammer. So we'll call it hammer. It open here and then it close here. This is a bullish candle, please. Okay, this is a bullish candle, so it means it close above the opening. Are you getting it? Let's not be confused. This is a bullish candle, but then it was when it opened, it sold all the way down. Sellers pushed price to the low. Then buyers came in and they pushed it up, and then it even bypassed the opening. So it closed above the opening. That made it what? A bullish candle. So how do you trade this? When you see this at a vantage point, maybe at your zone, you mark your zone down. When price comes there, you're going to buy. Okay, when price got there, it left this particular candlestick, hammer candle or pin bar for you. That means buyers are in control. Buyers are what? In control. And it shows what? A reversal. It's a reversal pattern, very serious one. When you see this at a support, you can just jump into the market and then you buy. If all your conferences are met and you saw this, just enter and you're going to catch. Market has about 98% of going up if it is on what? On the support. So the psychology behind is that buyers took over from what? From sellers all the way down here. So it closed above the opening, and that made it what? A bullish candlestick. So let's see if you can identify this on our chart. There is one here. This, I don't like this particular one. Good. Look at this one here. I don't even go far before identifying it. Can you see it? Can you guys see what I'm marking?
Yeah, we can see.
Good. See, after this candlestick happened, what did you see? Buyers took over from what? From the sellers, from the low there. And then it closes above what? The opening. And what happened? See how the market moved up. Market bought from that place up to this particular place. And this is a daily candlestick, a daily chart. So it means you're going to hold this market for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 30 days. So imagine the amount of money you're going to get. Okay. So this is how I love to identify them on what? On the support. Similar one is here. But this one, buyers came in, sellers came inside again. I love this one. This one, you hardly see that wick at the top there. See what happened again? Market, after the candlestick appear, what happened? Market bought up to this place. See another one here. Another one is here. This is a perfect one. This is a perfect one. It did not leave any wick. Can you see it? This black one here. It didn't leave any wick. So what happened? The next candlestick sold the whole day. So you could have made enough profit. When you go to this resistance, what happened? It went up. So another one is here. Since I even marked this one down earlier on. Can you guys see how it is when you identify this on a higher time frame? Good. So this is a pinbar or a hammer. So that's it. I'm teaching two things at the same time. Those who are already traders will understand everything perfectly. But those who are now learning will understand later on. Shoot. All right, so that's it for the pinbar or the hammer. It has small body, a very long wick. Then the wick represents something. All right. All right. Can you guys hear me? Hello? Good. Let's move to the other one. Hold on. Who is this? So let's get the inverted one. All right, so this is all what we call the inverted hammer. Let me give the original name for it. Shooting star. So some call it inverted hammer, others shooting star, others to what? Bearish Pinbar. Bearish Pinbar. So let me even use a red color for it. So it will be meaningful to us. It's not ready. Good. Okay. So when you turn the hammer upside down, that's it. Opposite of what? The first one. So this is a bullish Pinbar. This is what? A bearish Pinbar. So when you see this, when you see this on a resistance, you sell. When you see this on a resistance and it meets all your confluences, please sell. You're going to make money out of it. And when you also see this on support, like I earlier on said, this one's supposed to be seen on support. If not support, you don't do anything. You lose money. This one on resistance, you can sell. You can sell this. So this is a shooting star. So let's see if you can identify some on the resistance. Good. One is just here. Just identify it here. You see, on the resistance. So you sell. Another one is also here. You sell.
Okay. Can I ask a question?
Go ahead and ask.
Okay. Assuming at the resistance level,
Yeah.
I see the
shooting star.
the hammer.
Yeah.
Yeah, I see the shooting star,
Yeah.
but it is not. Is it possible you can see? It will not be a bearish candle, but rather a bullish one.
Oh, very good, very good, very good, very good. Thank you so much for this question. Listen, the color is just developed to differentiate between selling and buying, okay? The color doesn't really matter. When we come to patterns, where the color, maybe like the morning star, the evening star, the engulfing, the tweezer, that one, the color matters a little bit, okay? But for shooting star and co, color does not really matter. Is that clear?
Yes.
Yeah. What matters is the psychology behind it. What made it to become that particular candlestick? It was the sellers, okay? So let's take this one for instance. Let's assume this one is what? It's a green, it's a bullish candlestick, okay? That means let me look for an example so that it will be nice. If only we're going to get in it. Good. There is one here. Can you see this one here? This small one. It is not red. It just it is a bullish. It is green. Let me say it is green or black. I use black sometimes. I use deep green too, or dark green. It is not red, but the resistance level here is not very strong for it to hold. Okay, but then price still what? It's sold down. This daily chart. Can you see it? It still went down. So does not really matter. The candlestick doesn't really. Sorry, the color doesn't really matter. See what's happening here. Still, it went down. Good. I love this one. There's one here. This is a bullish candlestick. But see the way it took the market downwards. Can you see it? All the way. Anyway, this is another formation of candlestick. When it comes to candlestick formation, we're going to talk about it. And even this one here, it is red. But then it still made market to go up. Very good.
I'm having a question.
This is a nice one here. Okay, anyway, this is a bullish candlestick. It's from to see where we can have another one. Another one is here. Can you see it? This is not red, but it's still what? A Pinbar. See the way market went down. Good. People are only trading candlestick patterns. They don't have any strategy in addition, and they're making money. But not on 1 minute, not on 2 minutes, or 5 minutes, or 15 minutes. Higher, those who have big money, they trade on a higher time frame. So when you see this on a higher time frame, you can make money out of it. Can you, my brother, can you see this one? Hello?
Yes, yeah.
Very
Yes,
good.
I can.
This is just a bullish candlestick, right? A bullish Pinbar.
Bimba, yes.
Yes. It still made market to go down. So the color does not really have effect on it, okay? But the psychology,
Okay.
the psychology behind it, yeah. All right, can you proceed? So I think that's it for now. We don't have much to, let me see where I've reached. There are lots, as you advance, you'll be identify them yourself.
I have a question.
Okay, please go ahead and ask.
Okay, so you made mention of support and resistance.
Good.
How do you identify your support and resistance without the help of any indicators?
Good. Indicators.
Yeah.
I don't, this particular question is when we come to technical analysis, but I just have to tell you, maybe are you an advanced trader or a beginner?
Intermediate.
Intermediate. If I want to start telling you now, that means it's going to be another topic and I'm going to confuse the beginners. So we are going to come to that. It will not take long. Okay.
Okay.
We are on holiday. We are going to have enough Zoom meetings these days.
Thank you.
It's not difficult to identify though. When we come there, you see that it's very simple for you.
Okay.
All right. So let's move on to I think that's all for now. I don't want to touch the engulfing, the evening star in code. There are patterns. This ones, we just discussed the formation, okay? These are candlestick. We said there are always single candlestick. There are one candlesticks. So when we come to the patterns, where 2 or 3 candlesticks come together to form a pattern, and that will give you a signal that something want to happen. Okay. We are going to be seeing this that we just discussed, maybe the Pinbar combining with another candlestick, where it is going to give you a signal that no, market is about to reverse, or it's about to go the opposite direction. That will be our next Zoom meeting. But for now, let's just end this one here. And I hope it has been so beneficial to you guys. Ask questions. Let's go over, ask questions, then we'll see where we are not getting it well. Any question? Madam Grace, are you around?
Please, does it mean that it only forms on the higher time frame?
Come again.
I mean, does it mean that it only form in the higher time frames, like daily and then weekly and 4 hour and so?
Okay, thank you so much. Thank you so much. Let's go to even 1 minute, okay, to see whether we can identify them there. But before I answer the question, I want us to just use the practical to answer it. It forms everywhere. Every time they say what? Market is what? Is it fractal or fractal? Something like that. It means whatever is happening at the higher time frame also happening at the lower time frame. What we are seeing at the daily, weekly, monthly is equally happening at what? 1 minute, 2 minutes, 3 minutes. Okay. So the candlesticks that we identify, they can all be found what on the 1 minute. Let's see this 1 minute time frame. Okay. What can we see? Can you see where my cursor is?
Yeah.
Good. What type of candlestick is that?
That's a
yeah, it is still Pinbar. I mean, that's why I say the names that does not really matter to me. But where you identify it, okay? This is just a Pinbar. But they call it what? Bearish Pinbar or shooting star. This 1 minute. Have you seen what it does to price? What happened? It moved price downwards. Okay.
Yeah.
Let's come here again. Could this even be Doji or what is it? In this, okay, this indecision, okay. It moves market upwards. So it is what? Everywhere, wherever you see What you see on the daily can also be found on what? On the 1 minute.
Okay.
If you
Very much. Thank you.
let's go to 30 or 30 minutes time frame. If you can identify any of them there. I love the questions you're asking. It's already there. I can already see some.
A lot.
Lot. So if you can open, someone said if you can see, then you can have it. The market is all about you opening your eyes to see things. You see one, can you see this one here?
Yeah.
Right there, yeah. It moved market down. So another one is here, market came down. Then indecision is here, or doji is there, market came down small. So it happens everywhere. They occur everywhere. They occur everywhere. See what happened here. Market went up, boom. All right. Any other question? Are you satisfied, my brother?
Okay.
Yeah, I'm
I have
okay.
a question.
Thank you very much, sir.
So
Yeah,
let
I'm
me
okay. I'm
ask this
satisfied.
question.
Okay.
For example, with a beginning trader
Yeah.
and someone who holds a very small account,
Sure.
which time frames are best for analysis and which one are best for trading?
Oh, okay. For analysis, all the time frame are best, from monthly to weekly to daily to hourly to 4 hour. They're all best, okay? But for you to execute your trade, okay, you need to go lower than even the 30 minutes, okay? You should be either use the 5 minutes, you can also use the 1 minute. Are you getting it? The thing is, if you see a signal, maybe like if market is trending downwards on the monthly, then it means even if you come to what? The weekly, you should be doing the same thing. Daily should be doing the same thing. 4 hours should be doing the same thing. 30 minutes, 1 hour should be doing the same thing. Are you getting it? With that, you catch a very big momentum at that moment, even though your account is very small, and you can easily grow it. But if, let me say, 4 hour mentally is what? Bullish, okay? 4 hours is also what? Bullish. Then you come to 1 hour and then you are selling. Yeah, you can catch some reversal. But when the momentum becomes very high, it can just return against you at any time. Are you getting it? Are you with me?
Yes.
Yeah, okay.
So if
I understood.
it means if the daily is, oh sorry, if the hourly is what? Is 4 hour, and then the 1 hour is showing, sorry, if the 4 hour is what? Is a uptrend, and then 1 hour is showing you downtrend, it means it's only what? Retracing. But since you don't know when it's going to reverse, you know, you just go, you wait for it to also come to what? To downtrend. Or sorry, if the 4 hour, let me take it again. If the 4 hour is bullish, okay, and then the 1 hour is bearish, that means it's only what? Retracing. It is only retracing. So you wait for the 1 hour to also become what? To become bullish. Then you go to 15 minutes time frame or 5 minutes time frame. Then when it also become bullish, then enter there. With that, it is responding to, or it's even going according to all the higher time frames. Okay.
Okay. So it means that when you go to the higher time frame,
Yeah.
and assuming it is bullish,
Yeah.
you should wait, and you want to trade in the 15 minutes time frame, but you are in the hour time frame.
Yeah.
It means that you have to wait for the 15 minutes time frame to coincide with the 1 hour time frame. Exactly. Before you try to, and if it matches your technical analysis with your demand and supply levels and other things, that is when you can either buy or sell the market.
Exactly. That's it. That's the best way. That's how the banks, the institutions trade. But retail traders, we always want to make money quick. So we just see small sell now. We don't even know what is happening before the thing is selling. We don't check the higher time frame before we enter. Then before we see now, our market will turn against them and say, this is why they monitoring me. I just enter no one and they start going against me.
Yes.
It's very interesting.
Sometimes you enter, put your stop loss before you say Jack to look for it has taken you out already.
Exactly. Yeah. Any other question? Then we end the session for today.
I see.
You're going to learn a lot. You guys, I don't know why people don't like joining this meeting. That's why at times I feel lazy to also organize it, because about 100 and something, only 12 people come to Zoom. And then when we go back, people will be asking questions on what we've already discussed. Forest is very lucrative. I mean, I always say it me to be a patient man. First, I'm not patient like that. But now I can wait for even a day or that trading. Just waiting for setup. And when it comes to a zone and then you trade, so that you are confident. You are, even if you lose, you know that, that market went against your analysis. You did very well. Okay. So just put in all. Put your time, anything you have to put in to get this knowledge and start making money. Just do it.
Okay. So let me ask this. Sometimes when you are in the higher time frame, your stop loss is really big.
Sure.
And when you are in the down, if you are in the smaller time frame, it is small.
Sure.
Assuming you want to trade in the 4-hour time frame.
Yeah.
Maybe you do your analysis in the 1-day time frame and the 4-hour time frame, but you want to trade in the 4-hour time frame.
Okay.
Can you go back to 15 minutes time frame to put your stop loss?
Wow.
Or to analyze where to put your stop loss?
You just answered the question. You've answered the question already. Yes, that's the best way to trade.
Oh.
Yeah. We don't enter.
Okay.
We don't execute our trade on a high time frame. That's why I was first explaining that when you go to the daily and then it is forming higher, low, higher, high. Sorry to confuse you. It is going bullish, okay? And you come to the 15 minutes. You don't have to go to even the 4-hour to trade over there. You come to the 15 minutes time frame, okay? Then you execute your trade there.
Yes.
So you use all the time frame from daily, 4-hour, 1 hour, 30 minutes or 15 minutes. Some will use 30 minutes, some use 15 minutes. I recommend 15 minutes. If your account is above $100, I recommend what? 15 minutes. Come to 15 minutes, identify your zone, you enter your trade, then you put your stop loss there. Then you are good to go. But banks and those who have big accounts, some are using 4 hours. Because your forex like this, you use 4 hours to execute his trade. Maybe stop loss can be my account. So that's how it is. But they have big accounts, so they can do that on the 4-hour.
Okay.
Are you okay?
So from the book I read to, for example, if the market is downtrend, and it is doing lower high, higher low, lower high, higher low. From the book, it is said that you should trade according to the movement of the trend. So does that movement of the trend, does that mean you should only sell when it is at lower low, when it is about to start the lower low, depending on your strategy in terms of your position of the resistance and support?
Yeah, I can see like resistance and support power. Yeah, bro, that's it. That's all that we're just saying. If it is going higher low, it is forming higher lows, higher high, or higher high, higher lows. Then whatever you want to go to execute a trade, you should also find higher lows, higher high. That's what I say, except to an expert where you know when to catch reversals. Okay.
Okay.
And even catching reversals, the winning rate is below 50%. Okay.
Okay. Okay.
50%.
Okay. Thank you very much.
You're welcome. We'll come to all this when we start going to analyzing the market, and then we are treating market structure, when to enter, then how to use the time, all the time frames together so that you have a high winning rate. Okay. I think we are confusing at the beginners.
I'm also a beginner, but just that I took more. I read the book twice.
Yeah.
So I took down some notes, and I'm deciding to.
That's good. It will help you.
Practice on the demo account little by little.
That's it. You're going to get it. So that when we get to the high, so that you're going to see it very simple. It's not going to be a new thing to you, and you understand it very easily. Okay.
You are getting confused.
Is that? You're getting confused. Don't worry, the confusion will just go. All right. Any question on the candlestick formation? If no question, we have 4 minutes left. Tuesday, we are going to organize another meeting. That's going to be on the candlestick patterns. Okay. Now, candlestick pattern, I think it should be in advance. Yeah, it's going to be for advanced when we get to advanced stage. So we'll start with the market structure. Okay. Market structure, where people are going to understand how these candlesticks are moving. You see that some are even going up, some are coming down. You also understand why it is coming that way. And that's how we are. From there, then we'll start using the demo to trade. You guys will start making money. Those who have money in the account will start making money. Please, do you have anyone who has no registered his account with a broker? We have the link, the Deriv link. Deriv, we can use Deriv to trade both forex and synthetic. As time goes on, we're even going to shift from the synthetic and come to the forex to make more money there too. So we are trading everything. Kindly register your account with the broker. The link is over there. It's in the WhatsApp page. Create your link account, then get ready for the practical aspect of it. We'll start using the demo to practice more. And those who also want personal mentorship, you want it quick, we offer that one too, but with a fee that you're going to pay. And we're going to make sure that we take you step by step. Then we have enough time for you. Then you understand everything. That one goes for a fee. And those who want to join the Signal page, you can also join. All right. And thank you all for coming.
Thank you very much. May God bless you.
Amen. Bless you too. So we'll meet on Tuesday.
Thank you too. Thank you very much. Sure.
Okay.
Hello. Do you have any newcomer? Maybe, did anyone join us that we don't know much about him? Is this your first time of joining us here? Okay, I'm sure. Nah. All right. Good night to all of you.
Yeah, it's my first time of joining you.
Come again.
I'm joining you for the first time.
Please, your name.
My name is Kiki.
Come again.
Kiki.
Okay. Kiki. All right.
Yeah.
Nice having you.
It's a pleasure. I've learned a lot.
Okay, thank you.
Thank you so much.
Have you joined are you on the platform, the various platforms?
Yes, please, I'm there.
Okay, all right. So then, so nice. Sleep.